Good morning, good afternoon, good evening, good night, wherever you are, whenever you are. Welcome to a new DC live stream. I'm your host, Matthew Bittieri, here with you today for another Bitcoin technical analysis. So what I've been speaking about for the last couple of weeks is finally sort of probably starting, which is one last capitulation, I do believe, to the $13,000 to $14,000 range, which is where I believe the bottom should or will occur, because that is the 85% retracement from all-time high to the previous bear market low, which we've done previously in the last three bear/bull markets. So Bitcoin tends to retrace 85% during the bear market, and that point has a lot of confluence. It lines up with the I guess you could call it dead cat bounce that we had in 2018. We had the 2018 and 19 bear market, and then in the sort of mid 2019 we had this sort of relief rally before we eventually had this black swan event during COVID, and then we had the the bull market, so to speak. So I do think that this level right here is an area of interest for a lot of people. Okay, myself included. Now, even though this level isn't that far away, it's only really roughly from where we are. Let's just do a quick measurement, about 20%. I don't think a 5-figure Bitcoin is going to stimulate enough fear in the market for us to have a capitulation. The last week tends to be quite an aggressive week, kind of like what you can see. I got to change to my brush. What you can see here, we had like obviously a big capitulation here in the COVID crash. When we had the mid-market bull run dump, this was the Ukraine war dump. I think we need another large swift candle right about here, and that could even lead us to a 4-figure Bitcoin, which would probably create a lot of fear, a lot of uncertainty, and would get a lot of people probably out of the market and get the big whales to come in and scoop up some really cheap Bitcoin. Bitcoin's not going anywhere, but when the market does this, it creates a lot of fear, a lot of emotion. People overexpose themselves during the bull market, and now they kind of want to realize their losses because they're like, hey, I'm just going to cut my losses here. Bitcoin's going to zero. Everyone's talking about it, and it's just not a worthwhile investment. And they may never come back unless they then hear about the next bull run, and then people FOMO in. They usually FOMO in maybe halfway through the bull market, maybe make 50, 100% returns on their money, but they really don't make any wealth generating returns. This is the time right now in the bear market where we can make wealth generating returns. So I want you to remember that, especially because market psychology is quite big when it comes to trading. So on the weekly, let's have a quick look at some of my indicators and what they're telling me, and then I'm going to tell you what I think. So on the weekly, we can see this red money flow wave still being heavily it's been very thick. One of the positive things that we did talk about previously was the bullish divergence that we did create from having a lower low in price, but a higher low on market size B, one of the indicators I use. You can see this large wave right here, followed by a smaller wave, which means this is an anchor, this is a trigger, and it works much like the stochastic RSI, which also has a bullish divergence. The normal RSI, let me just zoom in on the normal RSI. So from this low to that low, okay, we can see that that is quite a bullish divergence. So we've got a bullish divergence on the card, but I still think we can have one more drive to the downside and possibly once again still creating a bullish divergence as long as the RSI indicator does not go below 26%, okay, which is just on here. So with that being said, let's go into the smaller time frames, such as the daily. So on the daily, what I can see is the stochastic RSI has been overbought for quite some time. Okay, right here, when we're over the 80 percentile mark, this is overbought. When we're below the 20 percentile, this is oversold. So normally, if you are not a trader, maybe you are a swing trader, someone that likes to keep an eye on the charts but really doesn't want to spend hours to technical, the stochastic RSI is perfect for anyone. Basically, sell your cryptocurrency, whatever it is, whatever asset it is, when you're above 80%, and buy it when it's below. Pretty much, it's as simple as that. It's kind of like buying the dip and then selling the pump. So right now, what was interesting is we were in the overbought territory for quite some time. Let me just measure this out. Exactly 19 days, okay, which is quite a long time. So over the last 3 weeks, I've been saying, hey, I think that Bitcoin is going to break down, because as you can see with the stochastic RSI, it's like a wave formation. It goes up, it goes down, it goes up, it goes down, it goes up, it goes down. But if you align it with the price action, it's easy to see where you should buy and where you should sell. And this is on a daily level, right? So this is not for people that are scalping. This is more for people that want to hold trades for days and weeks. So right here, this is where we were, I guess, at the peak. We had the moving averages cross over. And if I just reproduce these lines where we are in the overbought territory and the moving averages cross over, we can clearly see that each of these times was a good time to sell your crypto, or in this case, just Bitcoin. So we drop down. Let's just go from this first one. All right, let me get my little calculator. So from top to the bottom, that was 7.5%. From this one here, right, to the bottom, right. When I say bottom, when I'm talking about the where the moving averages have crossed back over bullish. So we can see we had a crossover here on the 20th of August. So I'm going to just bring it down here to the 20th. So that was 17%. Next one here. So let's go from this week here to the crossover down in the bullish range. Ooh, let me just go here. Man, I just have to drop this a little bit lower, make this a bit easier. Like so. Alrighty, so from here to there, which was there, we'll go there. That's where the moving averages crossed over. 18%. All right. Next one here. This was only very small, where we crossed over. That was 6%. Let's go to the next one. From here to the next crossover, which was there, that was 11%. And now we have this one where we have the crossover there. So that was only 4%. And right now, we can see that even though we were overbought for quite a period of time, we did cross over. We did have a little bit of sell-off. Okay, so from this candle to here, where we went bullish again, we only had about a 3.59% sell-off. But right now, we can see the moving averages once again crossed down. Both moving averages, both moving averages are now pointed to the downside. So I do believe we're going to see a bit of a sell-off now. Okay, and when I think is a great time to get back in is when these moving averages are down here below the 20th percentile. They've crossed over and they're willing to move to the upside. Super simple trading strategy. Whenever you develop a trading strategy as simple as this, all you need to do is back test, a bit like what we've just done. Basically, you can go back now, go to tradingview.com, create a free account, put on the stochastic RSI, and draw your vertical lines every time you see the stochastic RSI cross to the downside. And then what you can do is with a green line, put your vertical line every time the moving averages cross bullish. So let's make this green style. We'll go green. Okay, like so. And all I'm going to do now is just clone the green line, and then I'm going to place it every time I see the moving averages cross over when they are below the 20th percentile. So I'm not going to worry about these crosses where we're halfway through. I'm just going to place them where we see the moving averages crossing over each other in the 20th percentile or lower. Okay. So we can see now with just these last few iterations that every time we had a crossover, we could see if we crossed over here, we had a nice little pump. So that was 15%. Okay, so we had 15% here. Even if you still are holding on to this and you held it onto where we crossed bearish, let's just go from here to here. That's still 6.45%. Okay, 6.45%. Let's go to the next one from here where we crossed over. So right here, cross over to the next bearish crossover. That was 15%. Okay, 15%. Let's go to this one right here. Okay, so that one to the bearish crossover right there, 8.95%. Let's just do the last two so you guys can see. So from here to the bearish crossover up here. So that was 15%. And then the last one, even if we go to there, right, where we had this bearish crossover here, you could see that it's still 5%. So right now, stochastic RSI has been overbought for quite some time. We do need to come down and cool off. We may find support at the 50th percentile, which is right here. You can see a few times in the past, it's either acted as support or resistance. Okay, it can act as resistance, as you can see. So we do probably have, the next few days of the moving averages coming down, maybe retesting the 50th percentile. Maybe we get a bounce there. If not, we're going to have a fair bit of a sell-off. We are going to come back down here at some point. But right now, this is a fantastic time to get out of any positions. If you're in long positions, just cut them short. I've sold some of my crypto once again because, as I've just showed you, very simple strategy. When the stochastic RSI is up here, I sell my crypto. When it's down here, I buy my crypto. So hopefully that's a good indication where that I've now told you that I'm expecting a bit of a sell-off in Bitcoin for the next, at least for the next week. But how far can we go? Well, like I said, I've given you those targets. I do believe we should head down to at least 13 to 14 in the not too distant future. And hopefully you guys can buy some cheaper crypto. So on the 4 hour, so just looking at the 4 hour, the 4 hour right now shows that we are in the oversold territory. So now we're probably going to get just a bit of a bounce, maybe some sideways. It looks like we may have touched the Fibonacci golden pocket. Beautiful, you can see there. So Fibonacci golden pocket from this low to the high here. We're now stalling at the 618 Fibonacci retracement. We'll probably, maybe bounce back up to the value area low of this sideways range. So let's get the fixed range profile from here to here. So the value area low, we could possibly come all the way back up to about 17.1. Or we could also pull a Fibonacci retracement from this high to the low, and also from this high, local high, to this low. So we have, let's see if we have any confluence. We have a golden pocket. Let me just remove these other lines. So we have a golden pocket here and the value area low of the sideways range at 17,100. So that's an area to look at. We have the 786 and golden pocket just a little bit above the point of control of this entire sideways range that we have had. And then we have the value area high up here at 17,200, but there doesn't seem to be any fibs to line up with that. So right now, I'm looking for maybe a little bit of sideways, but I think this is just the start of a much larger sell-off. If you've been around watching me for a little bit of time, you would have seen that I had mentioned the hash ribbons indicator the moving averages crossing over not that long ago, which means that we're entering capitulation, which usually means a sell-off. But even though when we did have this signal, we did have a bit of a pump, and now we're kind of having, we're slowly having this sell-off, because I think, this sideways action was very good for bears to make whales think, we're going to start pumping here. People starting to open up their longs. It's adding a lot of liquidity once again, and now the shorts are coming in, and looks like we're going to be toppling over. So that is it for my Bitcoin technical analysis. I think, like just reiterating, I think we've got more selling to occur. I am still looking at $13,000 to $14,000. It feels like it's been ages since we've, it's been ages since Bitcoin's done anything. It's been a lot of sideways action. It's been quite boring, and obviously, just like everyone else, I do want this to end. But unfortunately, we don't make the rules. We just have to wait and see what the big whales are doing. Do they want to push the price up? Do they want to fake out to the bottom and then pump it up? We'll just have to wait and see. But right now, my indication is that we're going to have a pretty red week. So it just means there's potential buying opportunities, and hopefully you guys can take advantage. All right, guys, that is it from me. Thank you so much for watching. Just remember, please like, subscribe, turn on notifications for the channel. We go live Monday to Friday and post 2 educational videos on the weekend. So please support the channel. If you do like what you see, give us a little like. Takes you 5 seconds to do, and it means a world to us as a business. That's it from me, guys. Enjoy your week, and I'll catch you tomorrow for our DC News live stream. Bye for now.